Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. So we had a bearish reaction, an initial bullish reaction to the FOMC minutes, then a bearish reaction. It's really the financial sector right now that's driving the market down, as the tech sector did pretty well. Apple held up pretty well in response to its earnings. We know Facebook and Amazon have had bullish reaction to earnings and are still holding up near their all-time highs. So this market weakness is due to the financial sector, which we'll look at in just a moment. We'll look at all the sectors. But what we have on SPY is an approach and a key test of support, as we are down under right at the low of today here after hours as well. But if we break 262.11, that is the first bear break. That's going to shift the odds significantly that we get a bear break overall. Then if we take out 260.85 support, again, the odds will increase that the bears are going to take over here. And then we have a couple support levels, including the February dump low, to be watching. So we're very close to a bear break. The initial bear break is not, the game over move. It's just step number one. That is the first signal that we can act on, and then we can look for progress and follow through with increasing bear volume, losses of other support levels. Those will all confirm that we're looking in the right direction. IWM is holding up much better, so this tells me that IWM doesn't have a whole lot of financial sector exposure. We had a bull move today, and though we did give some of that back with an upper wick, we're still nowhere near breaking our support level of 151.71 just yet. So the weekly time frame, we can see that low is still intact, and we're still in an equilibrium pattern on IWM. And it does look like if we have a bear break in SPY, it's going to occur before IWM breaks bearish. QQQ, seeing some of that weakness, but the close at the end of the day still has us above support. We're looking at 160.14 and 156.47. Again, all of these supports could be tested before the end of this week with 2 trading days left to go, and a lot of these names right near their low of the week, which is the level to watch for the first break. QQQ on the weekly time frame, still tight here as well. The real break would be down at 156.47. So we have our higher low, higher high pattern, lower high, and 156.47 and 153.88 are the 2 key levels here for QQQ. VIX did close at the high of the day, but again, the fact that we're just seeing this inability to see any kind of real upside. So looking at SPY, we are down near the low. Well, it's kind of in line with what we saw yesterday, but the bottom line is it's not a position where I would comfortably be bullish for more than day trading VIX and UVXY and TVIX right now, just because with what we saw happen with XIV and it blew up, there are some signs here and there's some rumblings going around of something not right here with VIX. So resistance is 1682 and 1984. Support is down at 1475 and 1457. Weekly time frame, close to a bear break. Bulls doing their best to hold on and have to hold this 200-week moving average, which we have held a couple times at this point. That is the level that the bulls are attempting to hold currently. So let's check in on these sectors. XLK is the tech sector, and it held up pretty well today overall. Did close down weak with the weakness at the end of the day, but we had a higher start with the gap up open. So we can see that we are still holding a couple support levels here. And when we look at XLK on the weekly time frame, it is the same as QQQ, a potential head and shoulders pattern, but it's a clear tightening range currently. But when we look at XLF, it is clearly more bearish. And we've already broke to a lower high and a lower low, just barely on that lower low. But you can see another lower high, and it looks like we're heading right back down to that support. So the financial sector is showing more weakness right now. And we're never going to see huge market moves unless both the financial and tech sector going in the same direction. So if the financial sector dumps like it did today, but the tech sector holds up, things aren't going to get too ugly in the market with the bears running away with it. We have to see both going in the same direction to have that magnified, down 2% kind of day that we have seen in the recent past. Both sectors have to be going in the same direction for that to happen. So we'll see what tomorrow brings. If that support, the low of the week, breaks, that will definitely shift momentum longer term for the summer towards the bears as step number one, and we'll continue to follow it from there. We'll see you tomorrow.